It's time for Stock Picks. Local banks are in the spotlight today with Nedbank, ABSA and Standard Bank. Daniel Masvosvere from Ashburton Investments joins us to share his insights on these counters. Thank you so much for your time, Daniel. It's actually been quite interesting to see how the investor sentiment has been even ahead of these results as the banks were coming out with trading statements. But I first want to ask, in terms of the backdrop for all these banks, you know, they're all operating under a lower interest rate environment, lower inflation. Have they actually displayed the same behavior in terms of how they're responding to that environment?
Thanks for having me, Zanati. So I think, it's quite clear we're sort of in a low growth environment, and that's coming through consistently across the numbers that the banks have reported. So I think it's a theme consistent across all of them that, the environment we're in South Africa, at least, is a low growth environment. So in that sense, yes, you saw lower loan growth out of the retail parts of their businesses. And you're seeing better origination and growth coming out of the corporate side of their businesses. So that's a sort of consistent theme. I'd also add to that, to the extent they do have African businesses, you are seeing, better growth, and certainly the outlook into the second half, as ABSA highlights, is better growth coming out of the African operations. So I think you can see quite consistently how those themes line up across the different banks. The relative performance will differ, with some doing better in certain segments and so on, and we can get into the detail of that.
Yeah, well, I will get into the Africa conversation in a bit, but just looking, at the fact that you're talking about muted loan growth in the retail sector, but obviously we're seeing more of an uptick and more activity in the corporate sector. In terms of retail, is it really a demand picture where consumers are just not out here looking for loans, or a case of the banks maybe still kind of risk averse in terms of opening those credit taps?
Yeah, so I think what we've seen is you had credit losses peak, I'd say about 12 months or so ago, and we've seen bad debts really come in. So the credit loss ratios for everybody now are within, let's call it, through the cycle target ranges. So from that perspective, you could understand the banks starting to have a bit more appetite to lend as consumer health improves. I think the other key piece that we need to get going is GDP growth in the local economy. If you're really going to see that kicker in terms of retail loan growth. And again, that's the broader discussion around job growth, et cetera. I think everyone at these banks, the economists and all the different banks, are downgrading their expectations for loan growth, for loan growth, but also for GDP growth, more importantly, for the full year. And so in that low growth environment, it's hard to see how you can have retail loan growth run ahead. But the outlook is steadily improving. Okay, so from that point of view, I would be a bit more constructive on the short to medium term outlook.
Well, let's drill into the Africa conversation. Of course, we know Standard Bank has done well in that sphere, so is ABSA. But what was quite interesting is Nedbank actually coming out and saying that they're kind of restructuring their rest of Africa strategy, of course, disposing of its interest in EcoBank. How do you think that's working? And is Nedbank at a point where it is trying to maybe catch up with what ABSA and Standard Bank are doing in that rest of Africa region?
Yeah, so I think it's just EcoBank was an investment that they made a few years ago, and I'd argue over the years that's contributed more earnings volatility than earnings.
Okay.
They didn't really control the asset, and so strategically, I think it made sense for the business to pivot away from that asset. You've seen the proceeds from that essentially will be reinvested, amongst other things, in enhancing their capability and offering where they do have a credible right to win. So in the SA context, the acquisition of Ikorka, which will fit into the business banking strategy and augment the payments offering there. So I think that's positive for them. In terms of Africa, they do have within CIB some reach into East Africa. on the energy and infrastructure side. But I don't see them, building out the similar platform to Standard Bank and ABSA in Africa. Certainly not in the short to medium term. I think the focus is largely going to be on South Africa, and then where they do have existing client relationships, they can sort of follow that through into opportunities in East Africa and around there.
And just sticking with Nedbank, I was talking about how investor sentiment has been ahead of these results, and really Nedbank has just continued to be the underperformer, which is actually interesting because in recent history, ABSA used to be the underperformer, but Nedbank really backing the trend that we have seen. And I'm wondering exactly, what concerns investors have about Nedbank at this point, or is it a case of they're just waiting to see how then the strategy actually filters through to the results in the future?
Yeah, so I think it's just stepping back a little bit. If you looked at where we were in December last year, coming out of the May elections, you had a significant re-rating of the local stocks and counters, and very strong performance from a market point of view into December. And then, following that, coming into this year, SA Inc. in general has sold off a lot. And with that, the banks, I think, almost indiscriminately have sold off to the point where I think it's almost punitive, if I could put it that way. But that sort of presents an opportunity, right? So you're looking at these banks trading at low single-digit multiples in the case of Nedbank and ABSA, so call it 6 times. You're still going to get, in this low growth environment, healthy single to high single digit earnings growth. The dividend yield is sitting at 9%. So what I'm saying to you is, you're still going to get a return above the cost of capital, call it 16 to 19% as a range for the two, Nedbank and ABSA. Without a multiple expansion or re-rating. So that's quite compelling. And I'm basically saying I think the market's sort of overdone it, certainly with these two. But even if you look at First Rand, Standard Bank, the valuations are certainly undemanding, given what the growth expectations are.
Well, talking about then growth expectations and drilling into ABSA, have the fortunes there changed?
Yeah, so I think it's nice to see them, turn in what is 16% earnings growth in this period. The direction of travel is certainly more positive. We're seeing the ROE start to trend more towards that 15% that they're targeting for the full year this year, at 14.8% in this half. And then, FY26, the expectation is a 16% ROE. So, and a lot of that is just execution on the existing self-help in the business. We're happy to see the fact they don't have the hyperinflation accounting in Ghana again, and you're starting to see a positive contribution out of there. It's great to see the execution on the credit loss ratio, which is now 100 basis points and will track to within the through the cycle range in the second half of the year. So I think they're controlling their controllables to the extent they can. You've got a new CEO in place. And I think some of the messaging that we're getting out of that initial interaction with the CEO, certainly today, is positive. And, we just have to wait and see how things shake out. But the direction of travel, I think, is positive at ABSA.
Yeah, we're talking about direction of travel. Standard Bank indeed continuing to rise and rise. I looked at their return on equity and their forecast. And things look really, really good. Would you say that this is, that it's accelerating its momentum in sharpening its earnings quality?
Yeah, and I think that's fair. I think it's a fair way to look at it.
All right. Okay. Well, thank you so much for your time and for your insights there. Just really digging through the numbers that we have seen from Standard Bank, Nedbank, and ABSA. Really appreciate your time, Daniel. That was Daniel Masvosvere from Ashburton Investments.